Hello, my name's Jake Durchie. I'm here to talk to you a little bit about the City Heights project. This is a new construction project in Idaho Falls, Idaho. It's got multifamily and some commercial, so it's a mixed-use building. And this presentation is for prospective investors, people that might be interested in joining in and collaborating on this project. So we're going to go ahead and get started. So the highlights of the project are it is an 8% preferred return. 8% preferred return means the first 8% out of the project goes to the investors. During the term of the project, which is a 7-year term, we're projecting a 2.3 equity multiple. The time value of your money is just under a 15% internal rate of return, and the minimum investment is $50,000. This is our disclosure page. Basically, you need to be talking to your CPA, an attorney, and get advice on the details of this project if you're interested in moving forward. All right, let's introduce the team. My name's Jake Durchie. I've been investing for over 20 years in the eastern Idaho area. We've been doing development projects, building townhomes, building several multifamily projects in the area. Mindy is our manager of operations. If you reach out, you'll probably be talking to Mindy. She's kind of our head investor relations person. She has a ton of experience with managing properties and portfolios and really executing on the operations. Eric is with Construction Solutions. This is the construction company that we've selected. He has a ton of experience with the commercial building. Really look forward to having him on this project. You know, one of the specialties of Construction Solutions, not only do they build a really good product, but they are extremely sensitive about time. Time's extremely important in these types of projects. When you think about a little higher interest rates and being able to execute on a shorter timeline, it literally saves. It can make the difference between a project working and not working. So we're excited to work with Eric on this project. And then Michael Crickfalusi is our head financial guy. Lots of experience in the real estate management side of things. Really does a good job interfacing with our CPA, and it's been a great experience working with Mike. This is a little bit about our history. Like I say, we've been building and managing properties for a lot of years. We have a new construction project in Shelley that we've completed. We have another one in Idaho Falls that we've completed. We're managing a small portfolio of 108 units in eastern Idaho. You can see here that we have 168 million under management. That's always changing and always growing. Lots of it's third-party property management, and lots of it is managing our own units. And really, we're modeling the management company to do the best job we can for our properties and our investors' properties. We have these integrated services that gives us a bit of a competitive advantage and gives our investors a competitive advantage. So we own and manage a property management company. So on the operations side, we have good controls in place, and we're able to really gear the management toward investor goals and investor needs. It's been a very good advantage. We have a maintenance company, Jacob Grant Home Services, that it's been, again, good about choosing the right repairs and the right ways to maintain and upgrade properties so they execute on investor results and really team up with the management side of things in terms of having the properties in the right condition to attract, those high quality residents that take good care of the properties, pay rent on time, etc. Our real estate investing side is been valuable because we're able to choose and select floor plans, choose and select the type of construction that has been the best performing assets. And so having an angle on this development and construction side, the plans, the architecture, and things like that have been extremely effective in giving us the results we're looking for in terms of giving us better than average market results. All right, let's dive into the project. So Idaho Falls is I've lived here for since my adult life, most of my adult life. There's a couple cool things. We've really gotten marked on the map over the last 5 years. You'll see lots of national builders have come into town, and there's been a lot happening these last several years. The Milken Institute is a very respectable, very respected, I should say, a research group that ranks, large cities, small towns, in how they're growing and economic, development. I encourage you to check it out. But, in 2021, 2023, and 2024, Idaho Falls was ranked number one on the best performing small cities. I think that's been something that really moves the needle as far as painting the picture of what the future has looked like. It's been, Milken has done a good job predicting, I guess, what's happening. Idaho Falls is the fourth most populous city, and it's growing a lot. We're having trouble keeping up with it on the construction side of things. This is a little closer map of City Heights and the project. So it's City Heights is on First Street. First Street used to be Main Street a couple of generations ago. This is where the high school kids used to drag Main. Over the generations, this Main Street has moved. It's on 17th Street. It's moved more south. The last several years, Idaho Falls, actually the county, Idaho Falls, and the redevelopment agency has kind of identified this area as a redevelopment zone. If you can see on the map, you'll see the new police station. The city just spent several $1,000,000 building the state-of-the-art police station in the old stockyards. The stockyards were running until 2018, but really it's been an area that has, again, been identified as a redevelopment area. There's been developers that have purchased property. There's been projects that have been approved. It's been an area that's really starting to see significant growth, improvement, and redevelopment. The City Heights project is, we own the land. The project is completely shovel ready. We need to pull plans from the city, but they're all approved. So we only need to Eric basically needs to go down and pull the building permits. They're all ready to go. You can see here we have 40 apartment units, and we have 5,700 square feet of commercial retail space on the ground floor. So the ground floor is a bit mixed. It has some commercial and some residential on it. It's all in one building. Here's a makeup of it. There's about half of it's one bedrooms. And the other half is two bedrooms. We have one bath, 1.5 bath, and two bath. One of the things that makes renting properties easier is having options in terms of finishes, square footages. And if we can offer options like this, we find that we're able to secure those prospective residents more effectively. This property, I really like that there's only two really types, one bedrooms and two bedrooms, but within that there's multiple options, multiple finishes. Like I said on the last slide, we own the land, permits are approved, and the construction bids are already locked in. This shows a little bit about the construction bids and the costs of the whole project. Couple things I want to point out in this are the contingencies. We have contingencies built in. I think some of the biggest risk on this project is the construction side of things, supply side of things. And so we're trying to skate ahead of that puck as much as we can and be prepared. But that gives you an idea. It also has some reserves built in. We want to have reserves built in so especially that first year after construction as things come up. If they're not warranty items, we want to have plenty of cash to be able to take care of those and keep the property going. This is a cash flow statement of what will happen. Like I said before, this is kind of the returns, the internal rate of return of 15, the annualized average return of 33%, and the equity multiple. So in this slide, I'm going to go over what that means. Preferred return means the first returns off the property go to the investors. That first cash all goes to the investors, and this is the cash flow. This or estimated cash flow, $267,000 per year. And so, what that means is if the property is not performing at that level, then it will owe you that much. And so that, I guess what I'm saying is the 8% is guaranteed. And if the property won't pay that, then that gets paid back on year 7 when either we have a refinance or a liquidation event. And you can see that kind of equity return and how the split works over on this year 7 column. Internal rate of return takes into account the compounding nature of money and the time value of money. And that's why you'll see different numbers here. The internal rate of return is calculated using that time value of money. 15%, we're pleased with this projection, and we think it's very competitive in the market, especially with the inflation hedge that real estate gives you in a stable market like Idaho Falls. The average annualized return is, if you take all of the returns and average it over an annual return, it's a 33% return. We add that in because lots of the mutual funds will tell you the average annual return. And so we want you to be able to compare this investment vehicle to other vehicles. Equity multiple means if you put in, $100,000, it's going to be worth $233,000 at the end of the investment. Or that's how much how much cash you'll get out of it when you liquidate on year 7. A little bit of a timeline. We expect or project that we're going to be starting construction on August 1st. We're going to have to pull permits. There is a small house on the property. We have to demolish it, disconnect the utilities, and kind of secure the property. September 1st, we want to see construction begin. And then March 1st, 2026, so about 18 months later, we are projecting the construction will be complete. At that time, lease up begins, and we hope to be fully leased out by September 2026. Projected distributions would begin after that, which would be about Q4 of 2026 or Q1 of 2027. I want to highlight the financing. As you know, as you may or may not know, the financing market is there's lots of inflation out there. Interest rates are high. So finding the right loan for the project was extremely important. Mountain America is a local credit union. I really like the product that they're offering because it is a single loan that converts. And so typically on these projects, you would have one loan that you do the construction with that converts into long-term, or not that converts, you'd have to refinance it into long-term financing. And so if you think about all the title fees, appraisal fees, and just bank fees, it ends up being a little bit costly and can kind of hurt the performance. These guys are offering us one product that converts automatically, and it's not expensive. It's 2 points up front, which is more expensive than standard long-term financing typically, but within a half a point to a point. So we really like this loan. Schedule is a 30-year amortization schedule. It's a local credit union. We're happy with these results. Some of the tax advantages I want to make sure that people understand. When we build a project and we understand the costs of all of the construction that's done, we're able to do what's called cost segregation. And what that means is we can segregate the different parts of the construction project and put those on shorter depreciation schedules. And what that means for you is tax advantages. And so what happens, our best scenario is when we have positive cash flow and we're sending investors a quarterly check. Yet at the end of the year, when we send IRS statements or a K1, we have a negative K1. And so what that means is that preferred return becomes very much tax sheltered, and so it grows the benefit. It grows the benefit or the investment performance beyond that preferred return. This is something that starts after the lease up. Depreciation schedules after the operations begin. So that would be somewhere in 2026. So this gives you a little bit of an idea of where we're getting our rent prices. We're putting pro formas together and budgets together, and they're really based on comparable properties. These are some of those comparable properties. The other thing that I'll point out is, if you look at the average increase in rents, the average increase is 2% over the last 30 years or something like that. And those are the increases we're using. We're using averages. Those same inflation numbers are used to demonstrate how expenses increase. And so what it does is it means those projections are pretty conservative projections. This is a little bit about the rent trends in Idaho Falls. Like I say, Idaho Falls has kind of become a place that national builders are looking and national investors are looking. And so if you look back after COVID, you'll see that the rents really increased about 10% per year. And that happened through about 3 years, 18, 19, and 20, actually into 21 as well. And then, in 19 or 20, after COVID was kind of finishing up, there was a lot of construction that happened. And so you'll see periods of absorption, especially during these summer times. You'll see that on this in 2023. And then as absorption happens with the new projects, you see kind of a stabilization again. We have seen building in Idaho Falls slow down a little bit, and lots of it has been geared towards single family homes and selling rather than people renting. And so the new projects that we're seeing that are happening are those sales projects rather than rental projects. And so what that means is we're seeing the shortage. We'll go through these absorption periods where these new units come on the market and we absorb them and rent stabilizes, and then we're short again. And we kind of keep going through this cycle, and we're heading into it again because we're seeing lots of those larger projects finish up and rent out. This investment is a really good fit for folks that, you're looking for a hedge against inflation. If you're a little nervous about inflation, there's been a lot of inflation out there. Real estate has historically been a really great place to hedge against that and a way to stabilize your cash. This is a long-term return. This is not, if you're wanting to get cash really quickly, it's not a good place for your money. If you got, $50,000 in the bank and that's all of your savings account, probably not a great investment for you. Because once the money is invested, it really is locked away, and the results are the best for the folks that leave it in there and let it do its thing. There's lots of times where there's a 1 year period where the market doesn't do as well. But over 7 year periods, it has historically been a good place and a good slow place for you to grow your investment, to grow your nest egg. The other thing this is really good for is the tax write-off. There's lots of front-loaded tax write-off, and we try to take as much advantage of that as possible. People also invest with us when they want a completely passive experience. They're not really sure the right deals to do. They're not really sure how to manage it, how to make the decisions. Sometimes handing that off to people that have been doing it, professionals that have been doing it over the last 20 or 25 years, creates better results for everyone. I already mentioned it before, but this is not a short-term investment. It's not a good place to get cash quick. It is a slow investment with results on that 7 year horizon. All right, next steps. If you're interested in moving forward, we need to get a call scheduled So send an email over to invest@jacobgrant.com and we'll get on a call with you, answer any questions if there's any other questions, or do whatever we can to kind of help you get the answers. Determine if it's a good fit for you. Ask more questions about things you might be wondering about the project. The next step is Mindy will create a investor portal for you so you can look at the documents and kind of get a look at that portal. Next is to sign those documents, transfer your funds, and then you are invested in this project. So thanks a lot. I appreciate you joining me. If you made it this far in the video, thank you. Thanks for joining us. Love to get in contact with you. Feel free to give us a call, send us an email. Love to get on a call with you and see what kind of questions we can answer for you. And thank you and have a great day.